So now we will start the discussion about finance project ideas and listed on HEPro.in. In this discussion part, we will explore one of the intermediate level projects, investment portfolio management system. The investment portfolio management system project helps learners build a data-driven platform that tracks, analyzes, and optimizes investment portfolios across asset classes such as stocks, mutual funds, ETFs, bonds, and cryptocurrencies, providing a structured approach to understanding risk, return, and diversification. You will design modules for real time data ingestion, portfolio performance tracking, asset allocation optimization, and risk assessment using metrics like Sharpe ratio, beta, and value at risk, while integrating forecasting models to predict future price trends and portfolio behavior under different market conditions. The project focuses on developing tools such as automated rebalancing systems, investment dashboards, and performance reports, enabling learners to understand market volatility, portfolio construction strategies, and modern portfolio theory in practical scenarios. Through this intermediate level work, you will gain hands on experience in financial analytics, investment modeling, and visualization techniques that support smart investment decisions. Moving on. The Investment Portfolio Management System project enables you to design a smart, data driven platform that helps investors track, analyze, and optimize their portfolios in real time by integrating live market data, performance metrics, and risk assessment models into a unified dashboard. You will have to manage multiple asset classes, including stocks, ETFs, mutual funds, and bonds, while computing daily returns, cumulative gains, volatility, and benchmark comparisons to deliver clear insights into investment performance. The system will require the use of APIs like Yahoo Finance or Alpha Vantage to fetch live price updates and provide visual analytics such as asset allocation charts, diversification heat maps, and profit loss trackers using tools like Plotly or Power BI. Furthermore, you will implement risk matrix including Sharpe ratio, beta, standard deviation, and correlation matrices, supporting investors in making well informed decisions. By applying concepts from portfolio theory and financial modeling, this project helps you gain hands on experience in investment analytics, risk management, data visualization, and automated financial decision making, ultimately preparing you for careers in fintech, quantitative research, or investment advisory. So let us move to the next slide for further discussion. The risk assessment and optimization stage of the project requires you to compute critical portfolio risk metrics such as standard deviation, beta, Sharpe ratio, and value at risk while applying modern portfolio theory to build optimal asset allocations aligned with the user's risk tolerance, whether conservative, moderate, or aggressive, and you will continuously rebalance portfolios using optimization libraries like SciPy or CVXPy to maximize returns under defined constraints. Next, you will have to design an automated rebalancing and alert system that monitors deviations from target allocations, triggers rebalancing actions when thresholds are breached, and sends real time alerts for market volatility, price drops, or asset underperformance using schedulers, cron jobs, and APIs such as Twilio. Finally, you will build an investment, research, and recommendation engine that leverages machine learning models, sentiment analysis, and fundamental screening tools to generate personalized investment insights and highlight undervalued or high growth opportunities, with all findings represented through an intuitive dashboard built using Flask, Django, and visual tools like Plotly or Tableau. Moving on in the next slide. In this system architecture, you will have to understand how data flows from live market sources into analytical and decision making components, beginning with the market data and API integration layer, which continuously collects real time prices, historical data, and sentiment scores from services like Yahoo Finance, Alpha Vantage, and Sentiment APIs. This data then moves into the portfolio database and user profiles layer, where user assets, transaction history, and risk preferences are securely stored to support personalized computations. The portfolio analysis engine processes this information to calculate returns, Sharpe ratio, diversification levels, and performance trends. After which the system branches into three key modules: risk modeling, which computes VAR, beta, and exposure levels; optimization, which applies modern portfolio theory to determine ideal asset allocations and rebalancing plans; and research and alerts, which uses machine learning, rule based triggers, and notifications to deliver insights and warnings. All these processed outputs are finally delivered to the interactive dashboard and reports layer, where users visualize portfolio performance, allocation insights, optimization results, and predictive forecasts in a clean, intuitive interface that supports smarter investment decisions. Let us move to the next slide for further discussion. In this workflow, you will have to track each portfolio asset in real time using financial APIs so that daily updates reflect changes in total value, diversification, and gain loss percentages as shown in the example table, where assets like TCS, HDFC, and SBI MF display units by prices, current prices, and returns. While the Python return calculation snippet computes percentage gains to support continuous monitoring, you will then have to perform risk assessment by analyzing volatility, correlations, beta values, Sharpe ratio, and value at risk using tools like NumPy, Pandas, regression models, and SciPy to determine portfolio stability and downside exposure, followed by applying optimization algorithms such as mean variance optimization to find the best asset weights that maximize returns under specified risk constraints, with the provided CVXPY example demonstrating how optimal weights are generated from expected returns and covariance matrices. Moving on. In this workflow, you will have to continuously monitor portfolio allocations so that the system can automatically detect any drift from target levels, apply rebalancing rules such as selling overweight assets or buying underweight ones, and generate instant alerts using Python logic that compares target versus current percentages to flag deviations beyond set thresholds, ensuring the portfolio stays aligned with the investor's strategy. You will have to incorporate an AI driven research and recommendation engine that analyzes user preferences, market sentiment, risk tolerance, and investment goals to generate personalized suggestions supported by sentiment analysis of financial news and rule based frameworks for matching investor profiles with asset classes. While the example Python snippet illustrates how AI prompts can be used to produce tailored recommendations like index funds, balanced mutual funds, or blue chip stocks for long term moderate risk investors. Moving on in the next slide. In this section, you will have to ensure the investment platform maintains strong security and ethical standards by encrypting all portfolio and transaction data, enforcing SEBI compliant data handling practices, providing transparent disclaimers for AI generated insights, and securing user accounts with OAuth 2.0 or MFA to prevent unauthorized access. You will have to deliver key modules such as a real-time portfolio tracking system, a risk and optimization engine, an automated rebalancing and alert mechanism, and a comprehensive investment research and a recommendation dashboard that supports informed decision making. Through this project, you will develop critical skills including portfolio management for maintaining asset diversification, investment analysis for evaluating performance and returns, risk assessment using quantitative models, and algorithmic trading concepts that enable automated optimization and rebalancing, preparing you for real world investment management environments. Let us move to the next slide. By completing this project, you will have to build an end-to-end investment portfolio management system capable of live asset tracking, performance measurement, and market-linked updates, which also learning to apply modern portfolio theory and advanced risk optimization algorithms for constructing efficient portfolios aligned with user-defined risk levels. You will further implement automated alerts and rebalancing mechanisms that react to market changes or allocation drift, enabling smarter and more disciplined portfolio management. Additionally, you will develop AI-powered investment recommendation modules that analyze user profiles, market sentiment, and financial indicators to deliver personalized insights. Overall, this project prepares you for roles such as financial data analyst, quantitative researcher, or investment technology developer by combining data science, financial modeling, and automation to create intelligent and adaptive investment management solutions. So, that is everything that can be explained from the intermediate level project and investment portfolio management system. Stay tuned for upcoming projects from HEPro.